Hello and welcome to the show. Today we'll be talking about some oil plays. It is Memorial Day week, so it's going to be a short week. There's only 4 trading days this week. This video is made on May 31st, 2022, and we weren't trading on Monday, so we did trade on Tuesday. And let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Let's start with some miscellaneous current events, though. Okay, get some stuff out of the way. Gamestop, in case you didn't know, their earnings report is coming out June 1 after market close, and that should be quite interesting. They've got a new NFT marketplace that has launched. They've got some good things happening in Q1. Also note that I think I saw a tweet earlier in the week, something about PlayStation 5s. The demand for that is off the charts. Apparently, they're selling something like 1,000 a minute or something like that. And what does that mean for companies like GameStop that actually have PlayStation 5s in stock? Well, could be good things. Okay. So anyway, they also have a shareholder meeting coming up June 2nd, day after that. And that shareholders meeting, there's going to be talk about the proxy statement and the voting. There's a vote for increasing the number of shares to about 1 billion shares or so. The reason for that is to do what's called a split via dividend. So they intend to increase the number of shares and provide those increased number of shares to current shareholders in the form of a dividend. And that could boost the price significantly. It's quite interesting. Also, June 3rd, Friday, we're expecting Executive Order 13959 to take place. Big shout out and thanks to Cyntax, Queen of the Metaverse, for tweeting this. And of course, big shout out to the Butcher of Wall Street for letting people know about it. He's been letting people know on his channel and various other channels. Big shout out to The Gist for hosting that interview. That's pretty cool. Basically, what's happening is that on Friday, an executive order will come back into play that was put on hold. And that executive order will make about 75 Chinese companies untradeable, or at least not valued anything as collateral, and that can result in margin calls as collateral suddenly vanishes. And when margin calls happen, people will have to close positions, and when people close positions, it's possible that the whole market could dump. There's expected to be about 2,350 funds that have large positions in these Chinese companies, and that could be a big deal. So check out the videos. Link will be provided. It's really fascinating. It's an interesting story. Also in the news, we see that NSC 2022-003 was passed. This was a move by the GTCC to try to limit the effect of a MOASS, but in either case, the proposal will certainly not prevent MOASS. MOASS is still on the books. In case you didn't realize what MOASS means, it's mother of all short squeezes. There is a potential to be a MOASS for GameStop, which means that the stock price could hit towards infinity. By infinity, we mean way over $1,000 per share, possibly $100,000 per share, possibly higher than that. A lot of people don't plan to sell until at least $100,000 a share, so a lot of synthetics out there, a lot of naked shorts out there. We'll see where GameStop shares are headed. So let's talk about oil. That's the reason for this video, right? We see that a report came out from Bank of America. And basically the report says that Brent crude prices could jump to well above $150 a barrel if Russian exports fall off a cliff in the coming months, according to Bank of America. And the reason that they would be falling off a cliff is because it's unlikely that Asian buyers would be able to absorb all the Russian oil that's not wanted by the West. So they might shut down production, and when that happens, look out. But the interesting thing is, not only could oil go well above $150 a barrel, they said in a base case scenario, Brent crude prices could average something like $104 a barrel, maybe $100 a barrel in 2023. Think about that, $100 a barrel for oil for the rest of the year, and likely $100 a barrel for 2023. That's a base case. That's not if anything bad happens to the oil markets. That's just if things just move along as normal. Okay? That means oil could be doing well, and certain oil plays like Metamaterials, Torchlight Preferred Shares, which has a bunch of oil and gas assets for sale in Texas and the Oro Grande Basin, could paying off quite handsomely. Also means that companies like Camber Energy, which is an oil producer, could be doing quite well. If you've been watching this channel for some time, you know about Camber Energy and you know about MMTLP. So I won't go over those in detail, but those are some potential beneficiaries of this, large beneficiaries. Let's look at the price of oil, okay? So this is where oil has been for the past year or so, right? Going back to 2021. And as we can see, it's basically gone from under $40 a barrel all the way up to as high as over $120 a barrel, and then come back down to, right now it's down, but it's been headed in an upswing to about $114 a barrel almost. $114 a barrel almost. But we want to look at what the average price is over a year, and the reason is that people sell oil over a year. So if we look at the average price over a year, currently it's about $83.98, almost $84 per barrel. If you were selling oil over the course of a whole year, going back a year, you take your average for the year, it's about $84. Okay? It's not bad. Not bad. The reason that we're looking at that is because of MMTLP, right? I mean, they're likely to sell the oil land based upon the average price of oil over the course of a year. If we look at where the average price of oil is projected to be by the end of the month or so, it's projected to be about $88 a barrel, right? If things keep headed out, things keep heading in the direction that they're heading, could be $88 a barrel. That's almost $90 a barrel. What does that mean for MMTLP? Well, if you've been watching this channel for any length of time, you're probably familiar with this chart. Links will be provided as to how I developed this chart. But anyway, what this chart basically says is we're between these 2 points, $83.98 to $114 a barrel, right? This chart is the estimated value of the MMTLP dividend, assuming that you have a non-taxable event, and all the settings for MMTLP are provided, right? The COGS cost of $35 a barrel, that's the cost it takes to actually pump oil out of the ground. We know that there's about 3.2 billion barrels of oil in the ground in the Oro Grande Basin. We take a discount of oil in the ground at 12%, revenue interest of 49%. We take into account the corporate tax rate of 0% because it's a non-taxable event. They're just trying to sell the assets, right? But there should be an underwriter fee of about 10% or so, and we split that across 165 million shares. This chart does not take into account any of the natural gas that's in the Oro Grande Basin, and there's a ton of natural gas in there. So we are between these 2 points in the chart, which implies anywhere from $51 to $77 per share of dividend. Okay, in a month we'll be up around the $88 point for oil, for the average price of oil, which brings us close between $51 and $56 per share dividend. It's not bad. Okay. Now remember, I said that the natural gas was not included in there, and there's a ton of natural gas. Well, if we look at natural gas, it's climbed to its highest level in 14 years. Okay, there's a surge in demand for LNG, liquefied natural gas from Europe, largely due to the fact that Russia's cut off, or, Europeans are not buying natural gas from Russia. So what happens, U.S. companies are basically taking the natural gas they produce liquefying it, putting it under, decreasing the temperature and putting it under high pressure and all that. And as a result, you get liquefied natural gas. We put those on container ships, ship it off to Europe. And, U.S. companies are making a lot of profit there. But even still, our natural gas inventories, they're struggling to keep up with demand. We're struggling to keep up with demand in Europe. Okay, and that's pushing the price of natural gas higher. So, it's a quote in this article is, it's like if oil went to $200 per barrel, but it's not getting the same kind of attention. Okay. And they think there's probably more upside potential for natural gas prices here. The natural gas prices, highest price in 14 years, and it could go higher. So what does that mean for MMTLP shares and dividends? Well, I won't tell you, but RollerPigeon has an answer. Short answer, it's worth more than the current price of MMTLP shares, the natural gas alone. Check out her video. It's really worth it to see. Links will be provided. She's responsible for figuring out, or she has figured out what the natural gas value is of MMTLP, and that's pretty good. She also came up with the original calculations that I used in the spreadsheet, so big shout out to RollerPigeons. Okay, so there you go. Check it out. But let's look at the price of natural gas. This is, the price going back to about a year or so, right? And as we can see, it's gone from about $3 per, to almost $9. That's almost a 3x gain. Almost a 3x. It did dip along the way, but it's almost 3x. And in blue, I put in a moving average that is across 60 trading days, right? 60 trading days is about a month, by the way. So we can look back a month. And if we look back a month from March 31, we see that the price of natural gas at that time was about $4.50. Was about $4.50 for natural gas. Okay. And the reason we're looking back a month from March 31 is that Viking Energy, which is a subsidiary of Camber Energy, they have not yet filed their 10Q for March 31. Okay, and if we look at the last 10Q that they filed, we see that they have a ton of natural gas, as well as crude oil. Okay, a lot of crude oil, a lot of natural gas. And so, what does that mean? That means if we look at WTI crude oil, March 31, okay, and we take, an average of 60 days to go back from March 31 all the way to January 1, the average price of WTI is $94.72. That's pretty darn good, right? The average price of oil is $94.72. That's probably what they, will say is their average for selling oil in Q1. In Q2, it's likely to be over $100 a barrel. Okay, Q2 is almost done because Q2 is June 30th, and we're almost in June now. 30 more days. The average price of natural gas in Q1, $4.50, $4.53. Okay. In Q2, what are we looking at? We're looking at probably over $7. So natural gas is doing quite well. So here we see that oil is likely to go up. Right? Here's what we know from the charts. And natural gas is high and likely to go up. And what does that mean for Camber Energy? Well, what that means for Viking Energy, which Camber owns, Viking Energy's 2022 Q1 is likely to be very good. Okay. And their Q2 is likely to be even better. That's, I'm just saying. Camber Energy, as we know, owns 63% of Viking Energy, and Camber's filings are up to date. Once Viking's filings are up to date, they are planning to merge. And the new company in Camber Energy can do very, very well as a result of this. Look at it, look at these numbers. These numbers are awesome. These numbers are awesome. We're looking at a potential, windfall here coming up. And that's all I had to say. We talked about MMTLP and natural gas and oil there. The price of natural gas is heading upwards. Check out RollerPigeon's video on that. We talked about Camber Energy. That's also doing quite well. Those are the two oil plays that I typically talk about. Anyway, let me end this video by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So, with that, goodbye.